let's talk about a company that's actually doing some things right. So we just had GM that released their earnings. They raised their guidance. They had a revenue that went up 11%. They had the net income that stayed about flat, and their shares were up today. So what is GM doing right now that it seems like the other big three can't figure out? It seems like GM, at least over the last year, as far as the dealers that I'm going to, GM is the Chevy, the GMC dealerships, the Cadillac dealerships that I've seen. They're the only ones that I can see that don't seem to be overrun with trucks. And we're not seeing heavy discounts come from them. And their trucks are priced just about the same as your Ram and your Ford counterparts. But
Actually
GM does not
lower.
seem to be in trouble.
Actually lower than your Ram.
Really?
Yes.
Okay.
What are they doing right? They're playing both ends of the market better than anybody else. What do I mean by that? They are still catering to the entry level buyer. They still have plenty of relatively inexpensive new vehicles to offer people, that most of your other brands have disregarded entirely. They also still cater to the high profit margin, high content vehicles, and they have managed their inventory better than others. Now, if you read that article, they also indicate that yes, things have been working well with the higher profit margin stuff, but they don't know for how much longer that might continue. Even they have concerns that there are too many Americans that are excluded from being able to purchase those type of vehicles, and that scares them moving forward. Right now it looks great. Right now it looks like they've managed their inventory better than anybody else. How much longer that can continue, we all shall see. It's probably a somewhat of a slippery slope there for them, and any misstep could be extremely dangerous.
Yeah, and I remember a couple quarters ago they said that they were going to start cutting back on their EV investments,
Yes,
and it seems to have worked for them. I know that they still have a weakness in China right now,
yes,
and their automated driving stuff that's still a problem and a concern, which Tesla is really eating everyone else's lunch when it comes to any of the autonomous driving stuff right now. But I foresee that okay, we see strong quarters coming out of GM right now. But at some point, I think they're probably going to fall in suit with it. And this is just exactly what you're saying that they were concerned about is that the good times might be. They gave a warning because
yes,
they can see what's going on right now, and we're already seeing it in Stellantis. We're already seeing it in Ford, and I think really a lot of those buyers are probably in the same category of the buyers for a GM product.
yeah. And I they every manufacturer when they report their earnings tries and utilize the words that will show and encourage continued growth. But also when you you read what some of their concerns are. And usually those concerns are not listed in the first two or three paragraphs. Might be in paragraph 10 or 12 or 15, but they have legitimate concerns that they might have tapped out this market of higher profit margin vehicles. So if they are putting that in writing, if they are saying that, if that's not a signal to investors to be just a little bit cautious, I don't know. Either investors don't want those signals, or investors will just look right past those signals. Um, so it is an area of concern. It should be an area of concern. Um, what they might have to do is, my guess, is that they're going to need to produce more vehicles in the middle to that don't have quite as low a profit margin as their entry level vehicles, but don't have as high a profit margin as some of their upper echelon vehicles, and perhaps they can grow the volume of sales in the middle that will allow them to have enough positive income from those vehicles to help offset their EV investments. Because GM is no different than any of these other manufacturers. It's the it is the profits from their ICE vehicles that underwrites everything they want to do in their EV side of things. And I know one of the things they're saying is, well, they hope to be break even or profitable on EVs shortly. They're losing billions of dollars too. So
Yeah.
it's hard to see that happening quickly. But they are painting a slightly better picture than what other manufacturers have painted along those lines. Maybe they're Picasso and some of the others are Van Goghs. I don't know.
So I want to go back to you talking about them providing a product for, it seems like, every tier of customer.
Yes.
And like the Chevy Trax would be
Yeah.
one that really sticks out to me. But we just had news come out that they are discontinuing the Chevy Malibu. They're done with the 4-door sedan. Is it now? This is probably more of a, not just a GM question, but a broader market question, because we've seen that 4-door sedans are no longer a thing really at Stellantis, and they're no longer a thing at Ford. Is the new affordable 4-door sedan a small hatchback little SUV now? Is that what it's becoming? And is that because of that's what the consumer wants, or is that because it's what the manufacturer wants to do?
I think yes, the 4-door sedan is becoming the small crossover or hatchback. Is it because that's what the consumer wants? I don't know. I mean, I just had this conversation.
It might not matter. It might not matter what the consumer wants.
It doesn't matter what the consumer wants, because for the longest period of time, manufacturers in this country in the automotive space always just felt we can sell whatever we build. Okay, we will convince the American public to buy whatever it is we build. And they did that for the longest period of time. And I think they've been doing that, and they will continue to do that. Now, is it cheaper to build a hatchback than a sedan? I don't know. I don't know ultimately what's cheaper. But apparently the bean counters have figured out which ones make the most sense, the accountants at these businesses. And so whether you call it a sedan, or you call it a 5-door hatchback, or you call it a CUV or an SUV, you can make them small enough. Even Subaru is discontinuing the Legacy sedan.
Well, I can tell you, whatever GM is doing, the stock market seems to like it today. Today is the day that they release their earnings. If we're showing you this a couple of days later on the video, but today, at least right now, they're up 10%, and this is interesting because the last couple quarters that GM, if my memory serves me, that GM has reported numbers, the numbers have seemed good every quarter. But it seems like they would initially get this big pop, and then they would sell off after the call and after whatever worrisome things that GM would talk about. And I wonder if this is more of a market dynamic where they were able to hold on to their gains, and it follows through, where we know, okay, you don't fight the Fed, right? So we have the Fed that's starting to lower rates. But we've also seen that like bond yields have not really gone down. They've gone up. So lower rates don't necessarily always mean lower rates. So it's interesting how all the stock market's going up, GM's holding its gains. we anticipate that rates are going to go lower for consumers, but they're not turning over yet. Is this just like a Goldilocks moment for GM as far as their stock goes, as far as their company goes, or do you think it's just an element of them actually doing way better than what they should be doing right now in this environment?
I My guess is that this is a reaction to the first three paragraphs, and
Sorry.
and we haven't read down to the 15th paragraph that says, well, we're just a tad bit concerned about the price points of our higher profit margin vehicles is still maintaining enough affordability for enough people out there. So my guess is that it's just the initial quick reaction to the good report until people really dig in and look at the numbers, and then there's that oh moment, and then you'll see the stock go back down a little bit. It is what it is. People see what they want to see. People read what they want to read. People hear what they want to hear. And if they don't want to see, read, or hear the bad part of their financial condition, then they won't see, read, or hear it. It's just that simple.
Yeah, my take on it is I do think that the stock market is buying into things getting better for these OEMs just because rates they feel like are going to go down, and then it feel like it's going to be more there's going to be more availability to credit for a lot of these consumers. Whether or not that's actually going to be the case, I think that's what a lot of the stock market is buying into right now. And while we're seeing market prices at all-time highs, is because they think that things are going to get better no matter what goes on. We know that the Fed is on a course to lower rates from here on out.
Okay, so the Fed lowered rates 50 basis points in September. Mortgage rates have gone from like 6.11% to 6.8% since that happened. I don't believe we've really seen consumer rates come down on the automotive space to any great degree. So this just indicates to me that from a bank's perspective, the lowering of the Fed rate is it's a greed grab, a money grab from the banks to, well, we'll keep the rates where they were or raise them so that we can make more money. I don't think we've seen it translated into cheaper interest for consumers. Now, maybe the stock market is just assuming that that's going to happen, or wishing that that's going to happen, or suggesting that that should happen, but it hasn't happened yet. So it will be interesting to see how it plays out. Any way you slice it, the vast majority of people in this country cannot afford to buy the type of vehicles that most of the manufacturers are trying to sell.
And we'll get a little bit nerdy real quick, but this is the big reason why you've seen the Fed lower rates, but your mortgage rates and your auto loan rates have actually gone up. Lower rates don't always mean lower rates. The Fed doesn't actually control where the borrowing power, the borrowing rates go. It's the bond market that controls all of this. And I think the stock market's looking into it and saying, okay, well, eventually these rates are going to go lower, and that's going to give people more buying power. And that's why you see the stock market, in my opinion, continuously going up. But if it doesn't, and we keep high bond yields, even as the Fed is trying to lower these rates, then this is the bond market saying, okay, this is not good. And then you're going to have a big problem with a lot of these stocks and a lot of these OEMs. We tie this back to the car market. It's going to be a lot of problems because then you make it harder for consumers to buy vehicles because they're not able to get the credit, or the interest rates are so high that their monthly payments aren't able to go low enough. And at that point, you have to have manufacturers lower the price, and that's going to cut into their bottom line when they have to do that, since the Fed is trying to do their job, but the bond market is not cooperating with them.
Well, and we've already seen that a number of the banks are still tightening their borrowing guidelines when it comes to automotive. They are still concerned with the amount of delinquencies that they're seeing in their portfolios. So that, and we know that Edmunds just came out with another survey recently that the average amount of negative equity people have today on their trade-ins is in excess of $6,500 is the average. So that if banks are tightening their lending practices and they're going to require customers to put more money down, and a big percentage of the customers that might be in the market are proud owners of $6,500 or more of negative equity, that's going to require people to put down more cash in order to qualify for any automotive loan. And that's cash that most Americans don't have, and cash that most Americans don't want to use going into the holiday season, when I don't know, there's like Christmas and stuff, and there's all that shopping. So that I don't think it bodes well for the automotive industry at the moment, with the rates being what they are, with the amount of negative equity being what it is, and with a lower amount of cash liquidity that most folks can bring to the table. I don't think any of this bodes well for a real huge growth spurt in automotive. Now, if you said to me, do I think that there will be deals to be had by the end of the year? I do, because manufacturers and dealers are going to become desperate to get those few folks that can actually afford to buy a car to come to their dealership to buy them.
All right, well, a lot of you might not realize this, but this is a brand new channel, so make sure you hit that subscribe button, like, and let us know what you want us to talk about. All right, what's the cheapest car you've seen at the auction? Looking for shock value, vehicle condition, and he's also asking trade-in for Ray. So what's the cheapest car that you've ever traded for?
Well, back in the day, I remember looking at a used B210, a Datsun B210, and the driver's seat was bent, and it was, it was just really in terrible condition. And I jokingly said, "Was anybody killed in the accident?" And the response was yes, which I was not expecting. And literally traded that
joke
car.
went the wrong way.
Yeah, it really did. Yeah, it did not make me feel good. And literally traded the car for $5.
$5?
And I still might have overpaid. Yes.
And they said okay?
Yes. Yes.
How much could they have scrapped the car for at that time?
I don't know. Maybe I was good at what I did. I don't.
You made your dealership like 20x on that car.
Yeah, more than likely, yeah.
Let's see. The cheapest thing, I can't remember if I've ever bought a car for $150, but I know I bought cars at auction for $200. And even recently, my mechanic Alex, who buys a lot of cars for me, he bought I think it was a 2006 or 2007 Ford Freestyle. I think it had like 180,000 miles, and he paid $300 for it at the auction.
Wow.
And it was such a good deal. Like, sometimes cars just fall through the cracks. Nobody bids on them. He throws three fingers up and they take it because they're not in the car at all. A lot of times when you trade in cheaper cars, they bake it into whatever the deal is. They're giving you $0. Even they say on paper they're giving you $1,500. They would have taken that $1,500 off of the car that they're selling to you anyway. Exactly. So they write down on their paperwork that they're in at $0. So they'll just take whatever it brings at auction. And this was one of those situations. But the deal was so good that he just decided to keep it for himself. We allow our employees to buy cars at cost every once in a while. and he needed an extra car, so he bought that Freestyle for $300,
Wow.
and that was just like 2 or 3 weeks ago. So deals can still be had. I mean, I don't know if you consider even owning a Ford Freestyle as a deal, but for $300, if it runs and drives, I think that's considered a deal. So
I would agree. That's a hell of a deal.
Yeah. So in recent history, cheapest thing that we bought, $300, and I didn't get to make any money off of it. My mechanic is driving that thing. All right.
Well, maybe he'll agree to sell it to you when he decides it's time to get rid of it.
Only if he'll sell it to me for $300. He'll probably jack up the price a little bit, I would assume.
Hit that like button, hit the subscribe button. Tell every living person you know that they need to subscribe to Car Sense with Brandon and Ray.